What is a credit card chargeback for fraud? Imagine making a purchase online or in person, then suddenly seeing that charge on your statement you didn't authorize. That's where a credit card chargeback for fraud comes into play. When a cardholder notices a suspicious or unauthorized charge, they can dispute it with their bank. This process is called a chargeback. The bank then investigates the claim to see if it's valid under the rules of the credit card network. If the bank finds the charge was indeed fraudulent, they will temporarily credit the cardholder's account for the disputed amount. This means the money is returned to the customer while the bank reaches out to the merchant's bank, called the acquiring bank. The acquiring bank then deducts that amount from the merchant's account and notifies the merchant about the chargeback. From the merchant's side, they can accept the chargeback or fight it. To contest it, they need to provide proof that the transaction was real. This proof can include delivery receipts, email exchanges with the customer, or refund policies. The bank then reviews this evidence to decide whether to uphold or reverse the chargeback. If the chargeback is upheld, the merchant loses the money permanently, and the customer keeps the refund. If the merchant wins the dispute, they get their money back, and the customer's account is corrected. Chargeback fraud is a tricky part of this process. It happens when someone disputes a legitimate purchase with the goal of getting a refund while keeping the product or service. This is often called friendly fraud. For example, a person might buy something, then claim it was unauthorized or that they never received it, even if they did. Sometimes they even use the product and still file a chargeback. This kind of fraud makes it hard for merchants to tell what's real and what's fake. The system is meant to protect consumers from unauthorized charges, but it can be exploited. Merchants need strong fraud detection tools and clear evidence to defend themselves. If they can't prove the transaction was legitimate, they may face fees and financial losses. To reduce chargeback fraud, many use advanced monitoring tools, clear communication with customers, and strict verification methods. This helps catch suspicious activity early and prevent false claims. In short, a credit card chargeback for fraud is a way for consumers to get their money back if they believe a charge was not authorized. But it's important for merchants to stay alert and have good systems in place to avoid losing money from false disputes.